G'day everyone, welcome to another CSBP Fertilisers Market Update. I'm Grey Johnston and joined as ever by our Sales Strategy and Reliability Manager, Ben Sudlow. Hello Ben.
Good to see you again, Gray.
Welcome back to you. It's been about a month since I last caught up with Jonathan Hams, our Supply Chain Manager. We talked about what had been happening in global markets, and since that period of time there have been a few more developments. If we start with seaborne urea, where we normally start, it's been a bit of back and forth since Trump declared peace in the Middle East.
When you last spoke, I think things had jumped up and peace had come down, and then urea prices dropped, and they dropped about $60 a tonne. Sort of went back to as they were slightly before then. Subsequently, India came out with a tender, and all the producers putting tonnes in those tender. The price jacked back up $40 in the space of about 3 days as well. So it was up, it was down, and it's back a little bit up again. And it probably means in sort of Aussie dollar terms now, and we're sort of referencing markets, if we were buying now, and you can start to see that on the East Coast, prices are probably $80 to $100 more than what they are in the local market, in the West Australian market. And what we're seeing the impact of the West Australian market having bought a lot of urea earlier, those prices have been held down in this market, whereas, probably in Aussie dollar terms, urea in this market today would be closer to 900 or perhaps a bit over 900, relative to, prices of urea today being, in the low 800s or thereabouts.
So there's some disconnect there at certain times between a global market and what happens locally, depending on the supply-demand balance. But that global nitrogen pricing does start to flow through, I guess, to how people are thinking about next year's nitrogen price, and in particular what's happening then on the UAN price for imported UAN.
Yeah, so UAN has been probably more interesting topic of conversation and probably speculation in the last couple of weeks. And the reason being is that, clearly for us, we start thinking about what we're manufacturing, what we're importing now to meet back end of season demand, as we expect that should continue reasonably strong for the next month, particularly after the rain we've just had over the weekend. So that's the local sort of part, but then also making sure we've got stock on hand, whether we manufacture to meet those pre-fill volumes that we typically start seeing going out into farmers' tanks through September, October, through to Christmas. So that's the local flavour. Then to putting a global spin on that, we're sort of looking at where prices are from markets that we can buy from. Principally, that's the US. And look, as the US market is often perhaps is seen to correct down as they come out of their peak season. That hasn't happened as maybe it's predicted even as much as a month ago. Those prices have stayed relatively firm, and the market awaits two things: how much, if anything, that those prices may correct down for the US pre-fill season. And the second one, which is the one of great speculation at the moment, is Trump's view that everything Russian is going to be put 100% tariff on if they don't sort out the Russian-Ukraine war. Should that be the case, that's going to fundamentally change the trade flows of UAN and would fundamentally change how we would see the UA import market into Australia.
So we've talked about this before on the market update, but it might be worth refreshing for some listeners on that topic. We're in this sort of funny situation at the moment in global UAN trade flows are displaced by various tariff and sort of sanction arrangements. Can you just remind us all how that's working at the moment?
As strange as it might be, Russian UAN heads to the USA. Now there's somewhere between, I think it's about 900,000, about 1.6 million tonnes of Russian UAN goes across to the US.
The natural market for that product would normally be Europe?
Europe and probably historically has also been Australia. A lot of Europe has sanctioned out Russian product, and Australia's sanctioned out Russian product. And as a result of that, Russian products go to the US, and the US products go into some of those other markets, Latin America, Australia, elsewhere. So if that gets switched back on its head again, suddenly the US is not taking Russian product again. The US producers then have got the entire domestic market themselves, so they just protect that, supply that. They don't export at all. They probably don't need to export at all. And then the Russian product is left with not enough homes to go. That goes back into non-sanctioned parts of Europe, and not much everywhere else, because Canada, another market that they could supply, there's sanctions on. Australia won't take Russian products, there's sanctions on. So the Russian producers have got too much UAN, and they then fundamentally switch their production wherever they can back to producing urea, where they've got many more markets from. So the whole supply of UAN contracts because Russia's got nowhere to place it, and they'll switch their UAN back to something they can sell, which is being urea.
Mm-hmm. So in terms of how that's all going to play out, I guess your answer is going to be watch this space.
Well, probably I don't know. Probably the answer is great.
That's another nicer way of framing it.
Yeah.
But then from a CSBP perspective, we've got good supply in the near term, both through import and manufacture.
Yeah, and look, again, we've said it a bit in recent times. We're in a privileged position where we can make. We've got ammonium nitrate available from our chemicals division here. We're importing urea to make, and we relatively urea is quite expensive. So UAN, relative urea at the moment's pretty well priced. And look, I think we will hit a price to the for the pre-fill that should make it attractive enough to at least farmers to take some, and start moving some tons out to farm pre-harvest.
And for the avoidance of doubt, urea supply locally, we've still got good supply of that product if anyone's still after some?
There's still urea, and look, a lot of the urea now we start continue to push into as a manufacturing raw material for UAN, but yeah, there's still some available for those people who still want to put urea on in the next couple of weeks.
Okay, so we've talked about nitrogen. We've given the best picture we can there of nitrogen markets. Turning, I guess people start to also be thinking about not just late season application, but budgets and purchasing for next year. And to start, we know certainly a lot of farmers are starting to take a hedging approach where they're biting off chunks of their phosphates as they go, and we've provided opportunities for customers to do that. In terms of where phosphate markets are heading for the ammonium phosphates that tend to drive the pricing in our market.
I listened back to what you and Jonathan Ham spoke what 3.5, 4 weeks ago, and look, MAP and DAP prices have just, when things happen slowly, you don't notice they happen. The old boiling frog thing. Well, that's definitely what's been happening with phosphates, which we've spoken about on and off over the last 6 weeks, perhaps. Since we last spoke, MAP prices are up another $40 a ton. DAP prices $25 a ton, and the fact that MAP's gone up more than DAP, MAP's actually now closed the gap, and the difference between MAP and the BAP on a PBAP value is now sort of back to what somewhat of normality. So, we're now seeing in people's consciousness, they're probably thinking, I bought MAP at what do you reckon, $11.50 there, $11.80 thereabouts. Calculating roughly on future price, we're talking in the $1,400 mark now. So yeah, phosphate prices are continue to whether they stay there or not, Grey. There's this conflict of affordability versus there's just demand there, and principally coming out of India. Well, that's really the thing that we expect to play out over the next 3 months, 6 months.
So is it? You mentioned India there. This is mostly a demand-driven phenomenon. The strong pricing we're seeing globally.
Yeah, they don't ever buy enough to be able to sit out of the market for long enough to see a change of supply and demand. So. They just keep taking the slack in the market, and they keep choosing. We need it. Someone gives them a higher price. We need it. We've got to pay the price, and away it goes.
And another form of phosphate that's going to get used in this market is single superphosphate. Can you give any view as to where that market might be heading ahead of people organising their contracts for that this year?
Yeah, well, it's the first time, Grey, that we now import a full season of imported single super, having put the single super plant in care and maintenance this season. So we're paying probably more attention to we're definitely paying more attention to the cost of single super coming into the Australian market. What are our options? Quality, which is quality, physical quality, solubility quality, contaminant quality, all those sort of things are coming much more into our focus. But as with every other phosphates, they're higher, not surprisingly. And look, in terms of numbers, we're looking in the mid 500s, Aussie dollar terms, which relative to where MAP and DAP's gone is probably reasonably contained compared with where sort of particularly DAP's gone or MAP's gone over the last 3 or 4 months.
Okay, so we've covered off on what's happening in urea and then a bit more on the Flexion market. And we talked through what's happening in ammonium phosphates ahead of people thinking about next season's purchasing decisions. Anything else we should be talking about there, Ben?
Oh, Gray, I think, you and your team in the sales have, talked about hedging. We really don't know where prices are going to go. Would you want to go and buy 100% of your nitrogen, potassium, phosphorus now? Maybe some will, maybe some won't. But I think the idea that you take a little bit of time and just take a little bit, spread your risk over a longer period of time, that's the way we'll be approaching it. We expect that our customers would probably think that some sort of risk management along those lines would be pretty sensible too.
Okay, thanks for that, Ben. And on that bombshell, we'll wrap it up there. Thank you, Ben, for joining us.
Thanks for having me, Gray.
And thank you all out there in Fertiliser World. We'll see you again soon. Bye-bye.
This podcast is provided as general information only. The content of this podcast is not a recommendation and has been prepared without taking your objectives or circumstances into account. Before acting on the content of this, you should consider its appropriateness to your circumstances and seek independent advice.